and then answer your very good question. Couple of comments around it is what we must remember is we've had huge waves of technological innovation previously, and we've had massively important markets open and change going on in the global economy. And when we get excited about that, we tend to lose money. People tend to lose money. So I'm going all the way back to the South Sea bubble, the rolling manias for railways all the way through the 19th century, the tech-driven bubble of the 20s, which was around radio and autos and also new technology stuff. Those technologies were hugely impactful for the next 120 years, but they were terrible investments because you paid the wrong price. So that's just by way of introduction to say, look, it might be that the specific technology you're looking at today is new, but hey, there ain't nothing new under the sun really, because human behavior doesn't really change. If you're paying the wrong price for it, that's the problem. So that just sets the scene. Stepping back from that, what we're trying to do is find businesses that are, their inherent value is not being recognized by markets, and we can see why. So that generally implies a bit of discomfort, because if everybody knew it was great, it'd be in the price. So that forces us to look a bit further afield than probably most investors do. So lots of money in emerging markets, so to speak. So China, South Korea, a little bit of money in India, it's a bit expensive. Quite a bit of money in Europe. We have lots of money in the States too, but just nowhere near as much as other people. So we'd have 25% of our money there. Most of our peers would have 60 to 80% of their money there. And that's really interesting, right? Because if people are really, excited about the future, do they actually think the future is the developed West? Do they actually think the future is people who look like me? It's not. The future's in Asia.